It was a dark week for the American banking system. In just 5 days, we have seen the collapse of 3 US banks, with significant exposure in tech and crypto industries. Silverstar Bank, Silicon Valley Bank, and Signature Bank have raised multiple questions about the stability of the US banking system. It is the largest banking failure since the 2008 financial crisis, with Silicon Valley Bank as the second largest and Signature Bank as the third largest banking failures in the history of US banks, only after Washington Mutual in 2008. These banking failures have not only caused panic among the investors, but the general public is also getting a glimpse of 2008 financial crisis. People are scared and worried about the safety of their deposits in the banks. The US government has stepped in and also appointed FDIC, but the impact is not slowing down. Other bank stocks have also seen a significant drop in the last few days. In today's video, we are going to analyze the reason for the failure of the US banking system, what the US government is doing to protect the depositors' money, and the catastrophic impact of these collapses. And finally, we will see the impact of these failures on retail customers like you and me. So if you are interested to know more about this latest financial crisis happening in the largest economy in the world, then stick around. COVID pandemic has changed the economic landscape in many ways. While few industries were heavily impacted in 2020 and were facing financial troubles, few industries were booming like never before. Tech and crypto were few of those industries. The government was printing non-stop money. On one side, interest rates were at an all-time low. On the other side, the tech market was at an all-time high. We have seen so many VC-backed tech startups in the market. The crypto market was also at an all-time high, with a market cap of more than $3 trillion. All this looked like some get-rich-quick scheme. People were investing money here and there, and so were the banks. There were no regulations. The biggest investors of recent times, Warren Buffett and Charlie Munger, have predicted the crypto crash in its all-time high market. The two of these three banking failures happened because of the crypto market crash only, and the recent crypto fraud of FTX and Alameda Research. The third bank incurred losses due to the side effects from these crashes and the downturn in the tech industry. Let's understand the reason for the failure of these banks one by one. Silvergate Bank is a California-based bank, started in 1988. Initially, the bank was providing residential and commercial real estate loans and was also lending to industrial customers. In 2013, Silvergate started serving clients in cryptocurrency, and since then, Silvergate became the crypto bank. The bank grew rapidly and reached $1.9 billion in assets by 2017 and had 250 clients. While other traditional banks were reluctant to invest in crypto due to its high volatility, Silvergate was serving crypto exchanges as well as other crypto businesses. The bank launched its IPO in November 2019, and within 2 years, its stock value rose by 1,580%. Silvergate was the first regulated bank to develop the real-time payment system called Silvergate Exchange Network or SCN to exchange the flat currencies like US dollars and euros. By the end of 2022, 90% of the bank's deposits were in crypto and more than $1 billion in FTX only. After the collapse of FTX and crypto market downfall, the stock price of Silvergate was at an all-time low. In December 2022, Silvergate deposits fell to $3.8 billion from $12 billion in Q3 2022. After these losses, on March 8th, Silvergate Capital announced that it would wind down and voluntarily liquidate the bank and will do full repayment of all the deposits. Silicon Valley Bank or SVB is also a California-based bank, started in 1983. SVB started as a commercial bank and slowly became a bank for the high-tech economy. Before its collapse on March 10th, it was the 16th largest bank in US. SVB was the go-to bank for the tech startup industry. Almost 50% of all US VCs-backed companies in tech and healthcare were financed by SVB only. This includes companies like Pinterest, Airbnb, and Block. So it all started during the pandemic when a huge fundraising boom hit the Silicon Valley. The deposits in the bank went up 3 times from $60 billion in 2019 to $190 billion in 2022. Now usually banks had to either provide this money as loan or invest in other assets. So SVB started to invest this money in treasury bonds, which were giving returns of 1.5%. Usually these bonds are for long term like 10 years. This is a usual practice and banks do this all the time. But the concern is that right now we are not in normal times. We are in one of the major economic downturns where geopolitical issues and money printing have raised the inflation in US, and it is the highest in last 40 years. To control the situation, the government is raising the interest rates. Now, when the Federal Reserve raised interest rates, the market value of these bonds decreased, as new government bonds were paying higher returns. Also, due to the current market situation and rising inflation, the tech startups also started withdrawing money from the bank to run their day-to-day operations. After this, SVB did what any other bank would do at this point, is to sell a portfolio of its bonds and sell shares of SVB. In normal market conditions, this was not a big deal. But after the downfall of Silvergate and the announcement from SVB on the same day about their liquidity crunch induced the panic among its customers, and the classic bank run happened. By Thursday, March 9th, customers withdrew deposits of $42 billion and SVB had a negative cash balance of $958 million. Its share price went down by 60% on the same day, followed by 66% on Friday, March 10th. After these series of events, regulators took control of the bank and placed it under FDIC. On March 13th, HSBC took control of SVB UK and made sure that SVB UK employees will remain as it is in the bank and customers' deposits will be safe. Signature Bank is a New York-based bank started in 2001. Signature Bank started as a commercial bank and most of their business was to provide loans to multifamily rentals in New York City. In 2018, they started in the crypto business to diversify their deposits in the multifamily residentials. By early 2023, they became the second largest bank dealing in crypto, only second to the Silvergate Bank. The world's largest crypto exchange, Binance, was also a client of Signature Bank. After the collapse of FTX, Signature Bank also faced a similar situation as Silvergate Bank, and customers started to withdraw their money in panic. To control the situation, by the end of 2022, Signature Bank cut down on its crypto business and closed the ties with Binance Finance to reduce the risk. But after the collapse of Silvergate on March 8th and then SVB on March 10th, the situation went bad for Signature Bank. And as usual, the bank was hit by a multi-billion-dollar bank run, and bank stock also declined by 23% on Friday. And finally, on March 12th, regulators took control of the bank and Signature Bank became the third largest banking collapse in the history of US. Now coming to the most awaited part of this video. After the collapse of 3 big banks in just 5 days in the biggest economy in the world raises the concerns by itself. And that's why many banks are under public scrutiny. There is a 2-digit drop in the share prices of major banks in US. San Francisco-based bank First Republic's stock dropped by almost 70% on March 13th. The CEO of SVB is also under scrutiny for selling his stocks of SVB just a few days before the collapse. Although some people felt relaxed after the announcement from US President Joe Biden that all of their money will be safe and no loss will be paid by the taxpayers. In fact, all the uninsured money will also be paid out. For people who don't know, FDIC or Federal Deposit Insurance Corporation secures $250,000 per depositor per account. But this time, FDIC will secure all the money and there won't be any losses to the end customer. But this is only for depositors. How about the investors? Of course, their money won't be paid out. Also, the danger is not gone yet. According to the FDIC, banks at the end of last year reported $620 billion in paper losses. So now the question is, will there be any other banks that can collapse? Well, I think no one can predict this, but the US government is playing its role to save the banks. The Federal Reserve has created a Bank Term Funding Program or BTFP to provide collateral loans to banks for up to a year. This will reduce the risk associated with the current unrealized losses in the US banking system. Another side effect of this collapse will be on the tech startups and other small tech companies, as SVB was their go-to bank earlier. It will be interesting to see who will fill this gap. But for now, many companies are affected, including Coinbase, Circle, Roku, and Etsy. Other parts of the world will also see some scrutiny on their banking sectors. But every time someone's loss is also a profit for someone else. In all this financial downturn, major banks like Chase and Bank of America will gain many customers. Also, there is a space created after the 2 big crypto banks collapsed. All crypto exchanges and businesses need a trusted bank to provide them a payment gateway and maintain the cash flow. It won't be surprising if this gap is also filled by a big bank. Many banks were waiting for the opportunity to come into this space for many years. So, that's about the historic US banking collapse. I hope your deposits and investments are safe. Staying informed is one of the best ways in these economic conditions. Let us know what you think about the future of banking in the comments below. If you have enjoyed this video, please do like it. If you are new here, please subscribe to our channel and help us grow. We are trying to bring more amazing business stories to you. With that said, I shall catch you in the next one. Thank you and have a nice day.